Good morning, students. This is Gurjeet Luthra, your accountancy teacher. Our topic for discussion for today is guarantee of profit to a partner. Now, what do you mean by guarantee of profit to a partner? This basically means that sometimes a partner is given a guarantee by the other partners or maybe by the firm that he'll be given a particular share in profits, that means a particular amount of profit. Suppose his actual share doesn't turn out to be equal to that guaranteed amount, whatever shortfall or deficit is there, that will be contributed by the other partners or the guaranteeing partners, the one who has guaranteed. So let's see what this guarantee of profit concept is all about. Now, first of all, guarantee may be given to a newly admitted partner. That means if a new partner is admitted, so he might be given a guarantee, or an existing partner may also be given the guarantee. The profit may be guaranteed to an existing or a new partner by either all the remaining partners in some agreed ratio or one or more of the existing or old partners. This guarantee can be given. Now here one thing is to be noted. If the actual amount of profit, that means whatever is actual share, for example, his actual share is say 1/6 and the profit is 60,000 and the guaranteed amount is say 8,000. So now here this actual share comes out to be 10,000. In this particular case, he'll be given 10,000 and not 8,000. Are we clear? So this is what I meant by this. If actual amount is greater than the guaranteed amount, actual amount is to be paid. Now, let's take the various cases. Case A, guarantee of profit by all remaining partners. That means one partner is guaranteed by the remaining partners. So first step is, first of all, we have to actually calculate the profit of that partner to whom the guarantee is given as per the profit sharing ratio, like this 10,000. Step 2, minimum guaranteed profit is determined. Now, whatever is the minimum guaranteed profit, that is determined, or it will be given to you in the question, like 8,000 in this case. The higher of the above two is given to the guaranteed partner. If actual is higher, he'll be given the actual amount, or if the guaranteed is higher, guaranteed amount is higher, then he'll be given the guaranteed amount. So any deficit, that means if guaranteed amount is more than the actual amount, so guaranteed amount minus actual amount is to be borne by remaining partners in agreed ratio or the profit sharing ratio, whatever the ratio is being decided. Journal entries. First of all, on distributing the profit, as if there is no guarantee. So first of all, like normally we distribute profit, P&L appropriation account debit to all partners capital account. All partners are given the guaranteed amount, the profit according to the profit sharing ratio. Now, whatever deficiency is to be given by the partners, other partners, their account will be debited. So guaranteeing partners capital account debit to guaranteed partners capital account. For example, C is given a guarantee of rupees say 12,000 by A. Okay, and his actual amount comes out to be 10,000. So this deficit of 2,000 will be borne by A. The entry will be A debit 2,000 to C 2,000. This is the journal entries. Let's take an example here. ABC are partners. 641 is the ratio. C is guaranteed a minimum profit of, C is given, now here, a minimum profit of 2 lakh. The firm incurred a loss of 22 lakh for the year ending 31st March 18 say. So journal entry regarding deficiency borne by A and B and prepare P&L appropriation account. So first of all, when P&L appropriation account is prepared, there is net loss 22 lakh that will be divided among the partners, 12 lakh, 8 lakh, 2 lakh, 6 in the ratio 6:1. Now let's see how much guaranteed amount will be given to C. Let's see, loss of the firm is 22 lakh. C's share of loss is 2 lakh. Okay, Now guaranteed minimum amount is 2 lakh. Are we clear? So C's account will be credited with 4 lakh. How 4 lakh? 2 lakh is the amount of loss that he has to be compensated, and 2 lakh is the amount of guarantee that he is to be given, total 4 lakh. This 4 lakh will be contributed by A and B in their profit sharing ratio, that is 6:4, that is 3:2. So entry will be A debit 2,40,000, B debit 1,60,000 to C 4 lakh. Are we clear regarding this? This was the first case. Now we are coming across the second case. That is guarantee of profit by one or more of the existing partners. That means all the partners are not guaranteeing. Any one of them is guaranteeing, or any two of them are guaranteeing if there are 4 partners to the other one. So adjustment is made through partners capital account. How? Distribute profit among the partners as per profit sharing ratio. Step 2, whatever deficit is there, deficit deducted from the share of guaranteing partners and added to the share of guaranteed partner. That means the ones who are guaranteeing, their account will be debited. That means it will be deducted from their account and it will be credited or added to the partner to whom the guarantee is given. When more than one partner guarantees, deficit is shared by them in the agreed ratio. For example, let's take an example. PQR are partners 541. R is guaranteed that his minimum share in profit shall be 50,000. Profit for the year ending 31st March 2020 is 3,50,000. So deficit is to be met by P and Q in 3:2. Pass the journal entries. So let's see the working note first. Share of profit in their profit sharing ratio 541. The profit is 3,50,000. So that comes out to be 175,000, 1,40,000 and 35,000. Now let's see the deficit. Deficit is 15,000 because he was guaranteed a minimum of 50,000. So 15,000 is the deficit. This deficit shall be borne by P and Q in their profit sharing ratio, in their ratio 3:2, as we have been stated that the guaranteed amount is to be given by P and Q in their profit sharing ratio of 3:2. So 9 and 6. Are we clear? Journal entry will be P's capital account debit 9,000, Q's capital account debit 6,000 to R's capital account 15,000. Are we clear? Now let's take another example. XYZ are partners 532. Z is given a minimum guarantee of 10,000. Deficit to be borne by Y. So the profits for the 2 years, that is 19 and 20, are 40,000 and 60,000. Prepare P&L appropriation account for the 2 years. Now here we can see that in first case, the profit comes out to be in 532. If we divide, it comes out to be 20,000, 12,000 and 8,000. But the guaranteed amount is 10,000 to Z. So 2,000 will be added to Z's account and the guarantee is given by Y. So 2,000 will be deducted from Y's account. In the second case, profit is 60,000 and while we distribute the profit, it comes out to be 30,000, 18,000 and 12,000. So it is already more than the guaranteed amount. So no adjustment is required to be made. Is it clear? Now, we have to remember a few points. Accounting treatment of guarantee to a partner in case of loss. If a loss occurs, what is the accounting treatment, as we did in the very first example where there was a loss of 2 lakh to the guaranteed partner? Adjustment to be made through partner's capital account in following manner. Distribute the loss among all the partners. Guaranteed partner's capital account is credited with loss amount plus the guaranteed profit amount, and whatever the total amount is, it is debited to the remaining partners. So let's take this example. ABC partners, capitals are 10 lakh, 8 lakh, 6 lakh respectively. PSR is equal. C is guaranteed a minimum profit of 1 lakh. So the firm incurred a loss of 3 lakh for the year ending 31st March 2020. Show the necessary account for division of loss and give the effect to guarantee. So let's see. First of all, P&L appropriation account. Total loss is 3 lakh. If we divide 1 lakh, 1 lakh, 1 lakh. Okay. Now the guaranteed amount is 1 lakh to C. So the total amount to be credited to C will be 1 lakh for his loss, and 1 lakh that guarantee has been given, that is total 2 lakh, and this 2 lakh will be borne by the other partners in the profit sharing ratio, whatever is the profit sharing ratio, that is equal in this case. So if we prepare partners capital account, balance brought down, and then this loss is distributed 1 lakh, 1 lakh, 1 lakh, and then this journal entry. What is that journal entry? A is capital account debit, B is capital account debit to C's capital account. So that means the journal entry will be A debit, B debit, 1 lakh, 1 lakh to C, 2 lakh. So in A and B's capital account, it will be to C's capital account, and in C's capital account, it will be by A by B. Are we clear? Next, minimum earnings guaranteed by a partner. Suppose a partner guarantees that he will earn a particular amount for the firm. So any shortfall is to be borne by him. For example, ABC 2:1, partnership deed says A and B to get a salary of 15,000 each per month. C was granted a profit of 5 lakh. Any deficiency is to be borne by A and B in 3:2. A guaranteed that he will earn an annual fee of 2 lakh during the year ending 31st March 18. A earned a fee of 1,75,000 and profit of the firm is 15 lakh. Prepare P&L appropriation account and partners capital account. So let's see the P&L appropriation account first. Salary 15,000 per month, that means 1,80,000, 1,80,000, 3,60,000. Net profit is 15 lakh. Okay. Now let's see how this profit is to be appropriated. Total profit is 15 lakh 25,000. How this 25,000 has come? Just see. A guaranteed that he will earn an annual fee of rupees 2 lakh. But actually he earned for the firm only 1,75,000. So that means 25,000 is the deficit. That deficit is to be borne by A. Are we clear? Now let's see here the appropriations. 15 lakh 25,000 is the total profit. 15 lakh and 25,000, and 3,60,000 is the salary. When we deduct it, the distributable profit is 11,65,000. While we distribute it in the profit sharing ratio of 2:2:1, it comes out to be 4,66,000, 4,66,000, 2,33,000. Now the guaranteed amount is 5 lakh. So this 2,67,000 will be credited to C's account, that means added, and this 267,000 is to be borne by the other two partners. A and B. Okay. Now which ratio are to be they are to bear? Any deficiency is to be borne by A and B in 3:2. So 3:2 means 1,60,000 by A and 1,06,800 by B. So the net amount 3,05,800, 3,59,200, 5 lakh, that will be credited to the partner's capital account. So this is all about the guarantee. It will be followed by some assignments and some practical solutions. Okay.